The webinar will begin in 3 minutes. The webinar will begin in 1 minute. Welcome, everyone. We're pleased that you have joined us for today's webinar titled 2021's Key Financial Numbers. The webinar will last approximately 25 minutes, and at the end, you will be given an opportunity to receive supporting materials by email free of charge to you. You will also be told how you may email questions related to today's content to the presenter. Today's presenter will be Jennifer Lawler. Jennifer is an attorney and a senior consultant with Advanced Underwriting Consultants. In addition to her experience with answering tax and technical questions posed by producers every day, she has worked with closely held business owners as a lawyer and a tax professional. She'll draw on her experience during today's webinar, and here she is. Jennifer?
Thanks, Linus, and thanks for joining us today, and Happy New Year to everyone. I hope that everyone has recovered from their holiday celebrations and is getting back into the swing of things. Those of you that joined us in December may remember that the webinar chosen for this month was really RMD management in 2021 and beyond, but the IRS finalized some important financial numbers in December, so we thought we should start the year off with those new numbers because they'll be numbers that are revisited throughout the year, so they're good to know. In February, we'll pick up where we left off and we'll cover RMD management in 2021 and beyond. Today we'll cover several different topics and a few of the numbers that were updated. We could talk for the rest of the afternoon about all of them, but we'll cover just some of the highlights today. We'll talk about some of the new retirement plan numbers. We'll also talk about some of the numbers that will affect planning at an individual level. We'll also cover some general and miscellaneous numbers that are just good numbers to know. Typically, the IRS updates key financial numbers annually. These numbers are adjusted based on the Federal Cost of Living Index. Because 2020 was a different kind of year, some numbers were increased slightly and some numbers have remained the same. All of the numbers we're going to talk about today are current as of the time of this presentation, but anyone following the news today knows that there is some potential for change in the coming year. It seems unlikely that the numbers regarding retirement plans would change during the year, but there's more uncertainty when it comes to some of the individual numbers, particularly estate tax thresholds. But rest assured that if there are significant changes to our tax system at any point during the year, we here at Advanced Underwriting Consultants will cover those changes. So let's jump right in. We'll start with some of the key financial numbers that will affect retirement planning in 2021. These are numbers that will be revisited through the year for financial professionals that work in retirement planning. Again, some of these numbers have remained the same, while others were adjusted slightly. We're going to start with the maximum contribution that can be made to a defined benefit plan in 2021 under Section 415. For 2021, the maximum contribution is the lesser of $58,000 or 100% of compensation. This number increased slightly from 2020's $57,000. This limit includes elective contributions by the employee as well as employer contributions such as matching contributions and or profit sharing contributions. The 2021 limit on employee elective deferrals to Section 401k and Section 403b plans has remained the same at $19,500. This limit applies per individual rather than per plan. So if an individual has two different employers and they both offer 401k plans, the most the individual can contribute between both plans is $19,500, not $19,500 per plan. For those of you that deal with Section 457 plans, they are also subject to the $19,500 limit in 2021. The age 50 catch-up for Section 401k, Section 403b, and Section 457 plans remain the same at $6,500 for 2021. So a plan participant who is age 50 or older can make elective deferrals of up to $26,000 in 2021. Likewise, the maximum deferral amounts for simple IRA or simple 401k plans also remain the same as the 2020 limit at $13,500. The age 50 catch-up for simple plans also remain the same at $3,000. So in 2021, a plan participant age 50 or older can contribute up to $16,500 to their simple IRA or simple 401k plan. The IRA contribution limit also remained the same at $6,000 for 2021, as did the age 50 catch-up at $1,000. So in 2021, those who are age 50 and older and have enough earned income can contribute a total of $7,000 to their IRA. This limit is per individual rather than per account or per account type. And this is also a good time to remind everyone that the Secure Act did away with the age restriction for traditional IRA contributions. So now, as long as an individual has earned income, they can contribute to a traditional IRA regardless of their age. Whether or not the contribution is deductible will, of course, depend on their taxable income. Now we're going to transition to some of the key numbers for individual planning in 2021. The tax brackets, the rates of the tax brackets remain the same at 10, 12, 22, 24, 32, 35, and 37%. But the thresholds were increased slightly for inflation. I assume that no one really wanted to hear me listen to me rattle off a list of these numbers. So if you'd like more information about those, more detail about those, we'll tell you how to request those at the end of the presentation. The net investment income tax applies to individuals that have net investment income above a certain threshold and is still in play for 2021. The tax rate of 3.8% applies to the lesser of net investment income or modified adjusted gross income above certain thresholds. For married filing joint filers, that threshold is $250,000. For single filers, that threshold is $200,000. The rate of 3.8% remained the same for 2021, and this is on top of their regular income tax rate. So for a very high net worth taxpayer, their combined income tax rate, maybe a little over 40%. The rate remained the same, so not much has changed for the net investment income tax, but it's important to know that it's out there and that it still applies in 2021 so that our clients can plan accordingly. The capital gains and qualified dividend rate brackets will remain the same at 0, 15, and 20% for 2021 as of current law. The thresholds for each of these brackets were slightly increased due to inflation. Again, if you are interested in the detail on those inflated numbers, we will be happy to provide you with those if you request them. The federal estate tax exemption and lifetime gift exemption number was increased slightly from $11.58 million to $11.7 million per individual in 2021. So under the law as it is now, a married couple will have a combined estate and gift tax exemption amount of $23.4 million in 2021. Again, that's if there are no changes passed by Congress this year. This number is especially one that we'll be keeping our eye on because Democrats would like to see a lower number for estate tax exemption thresholds. And as I said earlier, if there are any changes, we'll be sure to address them when they are made. The annual gift tax exclusion remained the same at $15,000 for 2021. The $15,000 applies per individual, so a married couple can gift a combined $30,000 this year without the need to file a gift tax return. We here at Advanced Underwriting love qualified charitable distributions. QCDs are a great way for those that are 70 and a half to give to their favorite charity. They allow an IRA owner to give up to $100,000 a year to a qualifying charity without the distribution being included in the taxpayer's taxable income. The distribution does have to go straight from the IRA to the charity. In other words, if distribution is paid to the individual and an individual gives the funds to the charity, they do not qualify as a QCD and they will be included in taxable income. And the taxpayer would have to then be able to itemize on their tax return in order to deduct the gift. Because of that, QCDs are an especially good way for those taxpayers that do not itemize on their tax returns to give to their favorite charities. And as we know, QCDs can also be used to satisfy your RMD, so it's a great way to satisfy that RMD and to give. As many of you know, the RMD age was increased to age 72 for those who had not yet attained age 70 and a half in 2019. But the age 70 and a half requirement for QCDs did not go up with the RMD age. So even if an individual has not yet attained age 72 and is not required to start RMDs yet, they can still take advantage of QCDs once they reach age 70 and a half. It's also worth mentioning that QCDs can be sent from an inherited IRA as long as the beneficial owner has reached age 70 and a half. As I mentioned earlier, the highest tax bracket remained the same at 37%. And I'm also going to briefly go over the standard deduction amounts. The standard deduction for 2021 for a single filer is $12,550, and for a married filing joint couple, it is $25,100. Now we're going to move on to some of the miscellaneous numbers that are just good to know numbers. Each year, the IRS may adjust mileage rates for the business use of their car or miles driven for medical or moving purposes, and or miles driven for charitable purposes. For 2021, those numbers changed slightly. Miles driven for business use of a car are 56 cents per mile. Those driven for medical or moving purposes are 16 cents per mile, while those driven for charitable purposes are 14 cents per mile. In 2021, a qualified long-term care insurance policy can pay a tax-free per diem benefit of up to $400 or actual long-term care expenses if that number is greater than the $400. The Tax Cut and Jobs Act reduced the corporate income tax rate from 35% down to 21%. That rate has remained the same in 2021, assuming that there are no changes. Finally, we'll touch on the pass-through business tax deduction. This is a topic that we could spend a whole presentation on, and in fact, we have in the past, but we're going to briefly go over it here. The Tax Cut and Jobs Act created a new deduction for certain pass-through businesses. Pass-through businesses include S-corps, partnerships, and sole proprietorships. The full deduction is available for all pass-through businesses where taxable income is less than $164,900 for single filers or $329,800 for married filing joint filers. The deduction may be limited or completely eliminated where the taxable income is above that threshold, depending on the type of business, the owner's compensation, and their depreciable assets. The deduction is still available for those who qualify in 2021 under current laws. These updates almost always have an impact on the year's retirement planning and tax strategies. Being knowledgeable about these numbers allows us to help our clients determine how they can save for retirement planning and the best strategies for mitigating or reducing taxes in 2021. Likewise, understanding the income tax thresholds and tax rates are useful tools for our business owner clients. It's a good time to take advantage of those lower rates for the C Corps and to take advantage of the pass-through deduction for most other types of businesses. These updated numbers may be especially important for high net worth and high income clients that may be concerned about potential upcoming tax changes. These clients may be especially anxious about potential changes in the years ahead, and they may want to take advantage of the current lower income tax rates this year. The numbers we discussed today are just a few of the key numbers that will be useful to know for 2021 planning. Maybe most importantly, though, these changes create a good opportunity for you to reach out to your clients about those updates and about their planning objectives for 2021 and beyond, especially those that are anxious about upcoming tax changes or potential changes. If you contact your clients now and let them know about what we know and let them know that you'll be there to help them through the year with any potential changes, I'm sure that it will rest their minds a little bit, even though there is a lot of uncertainty. But thanks for joining us today, and I hope that everyone has a safe and prosperous new year. And with that, I'll hand it back over to Linus.
Thanks, Jennifer. And I'd like to join Jennifer in thanking all of you for joining us today. As a reminder, if you'd like to receive supporting materials, feel welcome to email us at asktheexpert@advancedunderwriting.com. That's asktheexpert@advancedunderwriting.com. You may also email questions related to today's webinar. Feel welcome to join us for the next webinar on the first Wednesday of next month, February 2nd, at this same time. Next month's webinar will be titled RMD Management in 2021 and Beyond. You can also find an archive of our past webinars on our YouTube channel. Today's presentation will be posted on our YouTube channel by the end of this week, so that it is available for reviewing if you feel like you've missed anything. Feel welcome to browse our YouTube channel, Advanced Underwriting Consultants, to see some of our past content, and feel welcome to share that link with those that you feel might be interested. Finally, for more information about the services that advanced underwriting consultants offer, including phone consultation and newsletter licensing, feel welcome to contact us at 615-224-1291. That's 615-224-1291. Thanks again, and best wishes for continued success.